Bicara Supply Chain, highlighting and showcasing solutions for the most complex challenges facing the industry in 21st century by our team of subject matter experts and mentors. Broadcasting every week, all year round, we will present the most up-to-date series of podcasts and webinars.
You are listening to Bicara Supply Chain, the podcast, the show that brings you an insight about supply chain and transformations with your host, Hadi. All right, so today we are going to talk about inventory cost reduction, and now I'm with Rodrigo Alfaro, a founder and solution expert at Integrated Supply Chain Management Solution based in Kansas, US. Hi, Rodrigo. How are you?
Hi. Thank you very much for the invitation. It's a pleasure to be part of your podcast.
Okay. All right. So, as I have mentioned to you earlier, today's topic is about inventory cost reduction. And so you may be aware that inventory costs are a major expense for many businesses. So what exactly is the inventory reduction, and why this is something that very essential for the business?
Well, it depends from every company what is the level of effort that is going to be in the inventory reduction. But maybe before thinking about inventory reductions, we need to know what do we have inventory, what is the purpose of having inventory, and looking as a resource rather as a waste, like we have been watching in many philosophies. And yes, at some point the excess of inventory is creating waste like any other of the 7 waste in excess is something that is creating a damage to the organization. Now, when we start thinking about the strategic aspect or the strategic perspective of the inventory, we can link it to the business planning of the company. And in the business planning is where we are establishing the financial targets of the organization. So the inventory is, from that perspective, is one of the key assets that we have. So all the supply chain managers or professionals that are in this area should know what is the impact in those financial terms. Now, if we keep looking at this strategic or aggregated level of the inventory, it is the way that we are using our money. And when we add it with the other assets that we have, like when we have the total asset, and we create this measure called return on total assets, that is the division of the net profit of the organization. So remember that the net profit is the bottom line. When we have already subtracted all the costs and expenses to the revenues, and we take out all the taxes and interests, and we have the bottom line there. When we do that by the total assets, we can watch what is our ratio, what is the return on total assets. And as per the Demand-Driven Institute, led by Carol Petak and Charles Smith, we can see that since 1965, this important metric has been decreasing from 4% to nowadays less than 1%. So there is something that went wrong in the middle of the way, because every time we are introducing new technologies that are here to helping us in the management of the inventory and all the assets of the company. And by some reason, it is not happening that way. So there are many reasons why this is happening, but one of the key questions is that we are increasing the impact of the bullwhip effect in the supply chain. So the bullwhip effect has a bidirectional effect in terms of the distortion of the demand signals and the variability of the continuous supply from the vendors to the customers. So this effect is having a negative impact on the inventory, because companies are passing from one day to the other, from having too much inventory to having too little, and vice versa. And this is the effect of running the MRP every day when we have organizations or companies that are facing high levels of variation in the demand, right? So sometimes we need to be careful, and that's why I started that before talking about inventory reduction, we need to see the inventory as a resource, as our friend, because before talking about that, we need to think about the flow of the operations. And one key tool that we have in lean manufacturing is the value stream mapping, right? So we learn to see the flow of the materials and the information. Then we need to identify where we need to place strategically the inventory that will help us with the flow.
All right. So based on your experience, what is the best way to reduce the inventory cost? Do you have any one or two examples?
Well, depending on the situation, in my own experience, is based on having a good understanding of the nature of your business. And with that, you need to know what is your product and what is the nature of the demand, a little bit of who are your clients, and then match it with your process and your supply base. And with that, you can establish what should be an optimal inventory level for the different components that you have. In the traditional way, we can see that we can classify the different components using the ABC classification of inventory, and cross it with the classification of runners, repeaters, and strangers, meaning that the runners are the components that we will be supplying all the time, or the ones that have more volume in our organization. Then we have the repeaters that from time to time we are producing, and then the strangers, which is those that could be of very low demand. So when we cross these two elements, the ABC classification with the runners, repeaters, and strangers, then we can define what will be the best replenishment strategy for the materials. If we need to place a Kanban, maybe could be for our components that are A, classification A of inventory, and that are runners, is something that will automatically run all the time, and we can place a Kanban, and then we will have an optimal level almost all the time, because the demand on the runners is stable. But when we are looking to the other components, we need to look for different lot size strategies, right, and different approaches to have the best approach for the replenishment. Now, what is coming new and is having extraordinary results is what is very new, but is the demand-driven approach, right? The demand-driven has proved inventory reductions of 30% in less than 6 months. And it's something that I will recommend to every supply chain professional that has been struggling with complex supply chain and with demand that is very variable. So the more complex and more variable you have the demand, the better results you will have with the demand-driven approach.
All right. So do you see any correlations between the cost reduction with another tool like the lean supply chain, for example?
Well, at the end, and this is the interesting thing of the demand-driven approach, that when we think about lean manufacturing, theory of constraints, Six Sigma, and maybe total quality management tools, industrial engineering that was the base of everything. When we take a look on all of these, they have something in common, and is the creation of flow. Right? So Lean has an interesting approach because besides working on the operations, the base of the Lean culture is to create an environment for the workforce where they can be empowered, where they can be able to solve their problems, and then they start making the deployment of the other tools, right? We remember that the two columns of the Toyota production system that is the base for the Lean approach. We have JIDOKA and just-in-time. And we need to have first JIDOKA, which is quality at the source, before doing the just-in-time. So I think, again, that before thinking about inventory reductions, you need to know your process and first create quality at the source. Ensure that there is a quality approach, and by having this quality culture is implementing a culture where we take into account and we embrace the concept of the internal customer. Every time we take care of the internal customer, we will ensure that we will deliver the best quality at the end. So the interaction between quality and the level of inventory is highly related, right? Because the more level of scrap or defects that you have in your process, the more protection in your inventory you will need.
All right. So my last question: how can inventory reduction be the critical to quality measure in order to realize optimal supply chain management?
Oh, well, it's like I said in the previous question, is about creating good quality in the products will ensure the flow of products, and with that you will minimize the level of protection that you need, right? You will reduce the safety stock that you need to carry out for that, just in case it's not coming with good quality, right? So ensuring that you have good quality, you will create flow in the process, and that at the end will result in better customer satisfaction, and with that you can increase your sales, and with that you can sell more and rotate your inventory, have more turnarounds.
All right, great. Okay, so thanks for joining us today, Rodrigo. It was very nice to speaking with you.
Thank you for the invitation, and I hope I can be here in another time with something more to share, and keep the good job with this podcast, and good luck to everybody.
All right, so okay, everyone, that's today's episode of Bicara Supply Chain, the podcast. Don't forget to join for another episode. Thank you for listening, and goodbye.
At Bicara Supply Chain, we are committed to driving global perspective to embrace technological adaptation in improving process efficiencies. Don't forget to subscribe, like, and share Bicara Supply Chain. And stay tuned for the latest updates. To learn more, visit our website www.bicarasupplychain.com. Thank you for listening to us. We look forward to seeing you at our next episode.